Nice to see you. Nice to be with you. Let's kick things off with a little risk disclaimer. It's been a pretty wild week. Really not a lot of movement out there, but tons of uncertainty. So we'll talk about that in just a minute. Let's begin. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you can afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the risks. All right, if you're following me out there on social media, best place to find me is right here, Mondays and Fridays, live on the YouTube channel, youtube.com/Chris Pulver. I also have some other handles out there on Instagram, Twitter, and TikTok, Real Chris Pulver. Post some videos through the week, but mainly live sessions, and of course running the trading rooms, Flex Trading Room, and the Equities on Demand Trading Room. All right, happy Friday, everybody. Nice to see everybody. How are we doing? Good, good, good. All right, let me go ahead and just jump on the live report here, grab the chat. And off we go. Tron in the house. Andrew, Dustin, Brad, Gary, Chris, Herbert, Fana. What's happening? Live report here. Happy Friday. Chat. All right. Nice to see you. Let me get the screen up here. I've got the U.S. oil chart. Big story for the last couple of weeks is will oil stretch to hit $100? And highs at 95.85. But we are retreating. We talked about this a couple times in the Flex Room and Equities on Demand. You know, how this is affecting everything. This is affecting commodity prices. This is affecting the fear of inflation, energy prices. Right now, with everything escalating with Russia, Ukraine, sanctions. There's Fed talk going on. You've got Bullard that's super hawkish, talking about 1% by July. You've got Powell that is not quite there yet. You have the Fed rate tool, the CME tool that we use quite a bit during the week just to check and see where rates are expected to be. I wonder if we actually have a new, chart. I'm gonna bring up that tool for a second. If they're looking at possibly a 25 to 50 basis points rate hike in March, but by June or July, are they expected to be higher? So interesting. Man, we've seen this be a seesaw the last couple of weeks. We're now looking at a 25 basis points hike with a higher probability versus the 50 basis points. So not exactly sure how that's playing out, but one thing we've been watching really closely is, look, the markets are going to struggle to take out these highs. There's just too much going on right now with, look, the tightening cycles are happening. Banks are scaling back, and as they should. I mean, it's been a ridiculous amount of stimulus in the economies for the last, decade plus. But what we created in 2020 was putting, 2008, 2009, 2012 programs to shame because of how much larger they were. So here we are, 437.55 pre-market on the SPY, looking like it's a little bit higher. I was looking for some real-time news, anything out of Russia, Ukraine. Here's Bullard, like I was talking about, 100 basis points rate hikes by July could be managed in many ways. He is on the more hawkish tone, and other Fed speakers are not. So, like I said, this tool right here has been changing quite a bit, over the last couple of weeks. We saw it like 70 to 80% probability of that 25 basis points hike in March. And then we saw it drop down to like 25%. And the expectation was that the Fed would raise rates by 0.5% in March. What I want to see here is July. If I just go off of Bullard's comments, right now the highest probability is about 44.7% that by July, the Fed will be sitting at 1% with the official cash rate and borrowing rate. So if we have, let's just do this. If we have 25, 25, 25, 25, I mean, to me, that makes sense, right? If we did 25 basis points every raise, this is the major Fed meetings with rate decisions, March, May, June, and July. So if we raise 25 basis points right there, that puts us at 1% by July. And if they keep raising rates, which has been discussed, maybe raising 25 basis points every meeting for the rest of the year, that puts us by December probably around 1.5%. So let's take a look at that really quickly here. So let's go December. What does this tool have priced in for the rest of the year? 1.5%. So that'd be 0.25, 0.5, 0.75, 1%, 0.2 or 1.25, 1.5, and that would put us towards the end of the year. So it looks like that could be the pace right now. All this will be a little bit clearer once we have that official March 16th rate decision. So I think, the uncertainty lies in what is the Fed doing for this first rate hike now? Like March 16th, what happens? Are they doing 25? If so, what is the tone? What is the press conference? What is Powell saying? Again, the Fed typically doesn't like to shock the markets or surprise the markets. So I think if they just come out and say it, the market can find a way to price in whatever they want to do. They want to raise 7 times for the next 7 months or 8 months, do it. You want to raise, 3 times, 4 times, but skip and do 25 to 50 basis points rate hikes, do it. But tell the market what's going on so we can actually go somewhere. Because watching this market stuck between a high and a low is incredibly frustrating, because the lack of volatility in the indices is a lack of volatility in Forex, is a lack of volatility in everything. And for trading, that kind of sucks, right? It's good to be an options trader because price going nowhere, as long as you're, seeing price go sideways, you got the right option strategy, you can make money there. But if we don't have a lot of movement in Forex, not making a lot of money. You're not seeing a lot of movement in stocks, not making a lot of money. So we need something to break this market loose. Okay. All right. Morning, Donna. Morning, David. Morning, Tom. What's happening, Wayne? How are you? Nice to see everybody. Okay. So again, requests are open. Let me know what you want to see. I'm going to go through the major indices. Pre-market is up barely. DIA pre-market is down by about 80 cents. Qs pre-market up slightly. We haven't taken out the lows yet. So none of the index ETFs have taken out the high or low at this time. So we're still stuck between a lot of the highs and lows. The Qs are the closest. So tech, again, has been probably the most vulnerable to all this uncertainty. And we are close to that January low on the QQQ. Volatility is spiking up a little bit. I am long a couple of instruments. I'm long the VIXI, which is trading around 1872. We haven't broken out any highs yet, but I'm trying to hold on to the VIXI for a spike up into the 30s. My break-evens are around 25 bucks. I would be happy in the 30s. I have a limit to take profit at $40. I'm also long on the VIXM, VIXM. I bought this at $30.70 yesterday. It's up about 40 cents right now. I have a covered call out to 34 bucks for March 18th. I'll put that on the chart here. So I bought at 30.70. And I'll put that on the chart at the bottom right here. So buy at 30.70 and a covered call. It's the $34 call at 30. It was like 95. Actually, I got $1 out of that yesterday for a covered call. So that lowers my cost to $20 or $29.70. And if price spikes up through 34, I will lose it. Otherwise, I know my break even. I can take profit. I can, cash in that call or take a small loss, but eventually go after, $3.30 or better in profit, hopefully. And this is an instrument that I'll keep looking to trade. If we have this thing spiking back down to 30 bucks, I'm looking to buy those lows, take it up for $2 or $3, buy those lows, take it up for $2 or $3, and just continue kind of dance around this support with volatility plays. And, I don't go super heavy, but if this helps me make an extra, if I do 100 shares, I make $300. I do 1,000 shares, I make $3,000. You have the capital to do it, great. But it's a nice way to piece some profits together as you might be waiting for some trades to play out. I know that I might be getting some additional assignments today. I'll be reviewing that in class at 10 o'clock for Equities on Demand. This week's been a pretty wild week in stocks to manage. If anyone that's in my Equities on Demand trading room, we initially had 21 expirations this week, which is a lot. Usually, I'm pretty comfortable with like 7. Like 5 to 7 is really manageable for the week, pretty simple. Sometimes we've had 10, 12. A lot of times we make, profits on a lot of the credit spreads and we don't have a lot of assignments. But what I did this week, because we had so many expirations, is we were actively managing some of those trades. So just as a recap, of the 21 expirations, we ended up taking about 16 of them off the table, and 14 of them were winners. 2 of them were small losses. And, one of them didn't have to be a loss. Coca-Cola, we were in. We did a 62 by 61, and we probably could take a trade that's break even or better on that today. We had a big spike in Coke yesterday. Coca-Cola, not the drug. Same thing, right? But no, we had a big spike yesterday up, and I took a 20-cent loss on this one, but it was fine because overall we're up a net like $2 and change from all the credits we did take this week. So I added that up yesterday. 0.15 plus 0.60 plus 0.42 plus 0.22 plus 0.22 plus 0.26 plus 0.40 plus 0.20 plus 0.44, and I took a loss on Coke for 20 cents, and I took a loss on Keurig Dr. Pepper for 11 cents. So my net profit is $2.60 credit on all the trades and very little assignment. But there might be some. Twitter, Uber, Under Armour, Palantir, Cisco. We closed out yesterday, so I can cross Cisco off the list. Deutsche Bank, Kraft Heinz, Baker Hughes, which should be a close for profit today. Zillow. FHN I was assigned, which is First Horizon National. That's a bank. And then BKR, I've got a duplicate. All right, so I do have to take a look at some of those today. Also, I might be assigned an OKTA, which is a education-based stock. I own this now, so after today's expiration, I'm going to own this at $200.25. This credit spread is still active. Actually, you know what? We closed that. We closed it out for $1.35 when it was up, so this was in profit. But I am going to take assignment here at $200.25 after my bear call spread expires for profit, and then I have a put that will take the assignment. So what I'll be doing next week on OKTA is trying to sell some $200 calls, probably 202.50 or 205. This is a fairly volatile stock. We've had plenty of spikes up here in the last month. We've had spikes up above $200. So even if I just repair this trade, drill it down by a couple of bucks, overall, I'm still pretty bullish on this trade. I know there's still some potential downside. It would be, I don't know, it'd probably be in my best interest to, wait to add more to it. We have a really strong resistance level at 145 and 150 if it falls that low. But if this is getting to oversold conditions and some divergence off these lows and we spike back up to $200 bucks or higher, then this will be fine. Usually the stock is pretty supportive and it bounces back pretty quickly. So anyway, but I'm going to take an assignment most likely today. Bear call spread will be in profit. That'll be worth some money. But I will take an assignment, and my break-even's 200.25. Okay, so again, that discussion will carry over into equities on demand at 10 a.m. If you have some Forex pairs, let me know. Currency strength chart for today. Yesterday's currency strength chart, everything was pretty quiet. We had a big spike in the JPY, big spike in the Aussie. The JPY did continue to stay somewhat strong for the day. This is yesterday's entire daily trading range and currency strength. And then today, we are seeing, the New Zealand and the Aussie on top, so suggesting some risk-on flows. We are seeing the dollar and CAD at baseline. The euro and Swiss are heading downwards right now. It's 9:13 a.m. The JPY was one of the weakest, and then coming back into the middle. So again, it's really weird. Look at this. You just see like nothing going on, and then the market gets really excited around 9 p.m. Eastern time. So into that first hour of Tokyo session, that first hour of Asia trading, the markets are starting to get pretty active. There's a little bit more of a bump here. You can see that the London session kicks things off a little bit further, but it just stayed in the same direction. So the direction that was created during the Asia session was actually continued through the London session, and here we are just kind of sitting here, and it's the same. So if you look at this like for the day, are we going to have any crosses where these start to come back to equilibrium, or are we going to see this widen with higher volatility to the upside, to the downside? Will the JPY, the Euro, the Swiss continue to head lower? Will the New Zealand and Aussie continue to head higher? Perhaps the dollar and CAD as well. We'll find out. So I'll continue to watch the price unfold today. I will probably be actively managing through all of today. I think it's important that I know what potential assignments I have in stocks. I think it's important that through 4 p.m. Wall Street's close, 5 p.m. Forex close, I need to know where things are at. So on the currency side, we have a couple of good trades running. I've got some profits that I'm considering taking some profit on the Aussie CAD. I've been watching this 9,200 level really closely. Traders have been with me on the Aussie CAD for a while, but we have just been buying lows, taking profit, buying some lows, taking some profit, buying some lows, and I'm looking to take this right back up into channel resistance around 92. Now, I still want to see this thing head up into that yearly pivot, which I think we can get there, and I'm holding my base position for that final target around 93.80, which is just shy of 9,400. So couple of things I'm watching. I have some positions that are down here near the lows, and I stacked up the Aussie CAD, so it is going pretty nicely in profit right now. I'm probably going to take some partial profits on the Aussie CAD and then see if we can get back in at lows once again. All right, but I'm still going to keep a majority of the position on, because if this works its way up, challenges this level or gets into this area and pauses at resistance and then breaks through, pending we have, let's say oil retreats, all right? If oil retreats to the downside, that should weaken the CAD. We are long Aussie CAD right now in the flex room. We're long New Zealand CAD. We're long dollar CAD. And those directions, those currency pairs could all play out really well if oil continues to drop. There are levels on oil around $84. That should be a monthly pivot for this month, I believe. U.S. oil monthly pivot for February is $83.87. So just like I said, 84 bucks. And if that hits, I mean, we have past resistance right there. We have a monthly pivot that could offer some support. I've talked about this one on the higher time frame. Let me use a little freehand line here. So check this out. If we connect the highs and we connect the lows and we split the middle, that's where I see oil providing some support. So we may come all the way down to these lows, right? Let me use a different color here. So could we come, all the way back down to this structure low around $70? Maybe. But if we just slowly pull back and we find that monthly pivot support, we find that past resistance becoming support, we could have this little pullback into here around $85, and then more upside continues as, oil and energy prices continue to stay pretty elevated. Timing this will be really interesting. There could be a massive correction on oil once the Fed starts to raise rates. I don't know. I mean, really, it doesn't necessarily have to correlate. But it's going to be interesting to see how the dollar reacts. I mean, with the upcoming pending rate hike for the U.S., and we have the Bank of England raising rates, we have the ECB talking about raising rates, we have even the RBA talking about raising rates this year. It is really all about central banks and currencies. So U.S. dollar, which has been very indecisive, and we're still indecisive. So we have established a lot of indecision since December. We're not breaking highs. We're not breaking lows. This is making at least 7 currency pairs difficult to trade. The Japanese yen, same thing. The dollar and the yen are moving pretty much in tandem. The stock market's not making new highs and lows. So it just seems like volatility as a whole right now, we're just kind of frozen in place. Now, if you have traded through environments like this, sometimes it gets frustrating, sometimes it gets boring, but I'm telling you, it's not going to stay like this. I feel like if you're patient for another 3 to 4 weeks, once this rate hike stuff starts to come in, I'm not saying that a rate hike guarantees the dollar gets stronger or weaker, but what I am saying is that it's not going to stay sideways. So at some point, we are going to be breaking these highs or these lows, and this dollar gets a move lower to higher or higher to higher or lower to lower or higher to lower. Something's going to happen. And guess what? We'll be digesting that, price action, and we will be trading it. So this is what we have to do. I mean, if you're in the trenches scalping on smaller time frames, going after little wins, great. But we've talked about this. Tarek's a trader that's in the flex trading room, was talked about volatility being so low that day trading opportunities are pretty difficult, and I totally agree. They are. Volatility as a whole is down right now, but that doesn't mean that we're not going to have ample opportunities probably within the next couple of weeks, because we typically don't see the market stay sideways like this for a long time. Maybe a cycle of a month or so, and then once it's ready to break out, a bigger move is certainly on the table. So just get ready. All right, that's all I'm saying. So dollar index is sideways. We're watching oil closely. Gold and silver. Gold's had a great week. If you look at the chart here, the daily candles have been up all week. You look at the weekly candle, it's going to be one big green candle. Look at that. So now we've had a nice recovery on gold. In fact, we have 3 consecutive weeks of gold, and we have been bullish on this since the break of 1750, just kind of patiently waiting for this neckline to break. Last week's close above, we got it, and we had a nice little breakout. Also, we were using kind of this wedge structure where we have this high connected to this high, and last week's close was right on it. And so when we started trading on Monday this week, we just looked and said, hey, if price is going to stay bullish, now is the time to get that breakout. And we got it. So all week, gold has been pushing up. We're just shy of $1,900. Look left, right there, right there. We have this measured move, by the way, low to high, higher low to higher high. So we hit symmetry, pull back again. If we hit symmetry, we're probably close to symmetry once again. Now that I see that, let me drag this area. So if we have low to high, if we had another pullback, we have a potential symmetry trade right here. So this higher low to higher high, we are very close to hitting that final leg of symmetry. Okay. Now, from the textbook head and shoulders trade, this has room to get up to 1980, which suggests that we're still going higher. And I would say this, having this 1, 2, 3, 4, 5, even if we have a pullback on gold, as long as we stay above 1840, this is still looking postured bullish to me. And silver's also had a pretty good run. I had a chart alarm this morning go off on silver at $24. So XAG USD. XAG USD is trading at 23.93. Go to the daily chart here. Thanks, David. Yeah, for everyone watching, as David said, hit that thumbs up button for it. Just get it out of the way. Just take the 1 second, click the thumbs up. Let's get on with it, right? Just make it a habit. Come in, smash that thumbs up button. Good stuff for the algorithm. All right, 23.94. We have some credit spreads running on SLV. In fact, this week in Equities on Demand, we were tracking all three of these positions because at different times, I know, I have a 2150 by 21. That's going to be in profit. We close it out for a win. We also have where are the other ones here? We have 3 in a row that we were tracking this week right here. So the 23 by 2250, that's in profit. The 2050 by 20, that's in profit. The 2150 by 21, that's in profit. All of these are looking to close for, if you manage them early prior to today's expiration, the 21 cents, you can grab probably 20 of it. The 28 cents, you can grab 25, 26 of it. The 40 cents, which was an incredible fill on that one for a 50-cent spread, we should be able to grab probably 35 to 38 cents of that. Okay, so this one right here may not even be a repair well, I take that back because it's SLV, not XAG. Hang on a second. SLV, $23. We're trading at 22.13. So there would be an assignment on the $23 because I doubt we're going to get up there today. That's pushing silver all the way up here. I don't think we're going to hit that today. So that would be an assignment, but an easy repair on SLV. But anyway, 2 of the 3 working out really nicely and a stock that I still want to own for more legs to the upside. Good stuff. All right, thanks. Look at that. Look at that. David, you're such an influencer. Get some more thumbs up for me. Awesome. Okay, so we've got some of that. I saw some requests. Pound dollar, pound yen. Let's take a look at those. Pound dollar, pound yen. So we're at 36.04 on the pound US dollar. Again, if it's a dollar cross, you're going to see a lot of indecision. Even pound dollar here. We have highs, we have lows, price is not going anywhere. This is now 2 weeks of indecision. So are we going to have another 2 weeks of indecision, possibly another 3 weeks of indecision? Why? Because we have a Fed rate hike coming in March. Does that mean stronger dollar or does that mean weaker dollar? I don't know. It really just depends on how the market has priced in this Fed tightening cycle. And I honestly don't think that it has because the market doesn't even know how many rates they're going to have, how many rate hikes they're going to have, right? So is it 25 basis points for the next 7 months? Is it 0.5 or 50 basis points or 0.5% for the next March and then again in July and then again in September? I mean, the market really doesn't know, and you can tell because that's exactly what it's shown us. The market doesn't know, and I'm sure money out there that doesn't know is not really getting overly committed to either direction. So I'm sure this is what's going to open up the floodgates for volatility. What's important is that we follow it and don't get stuck on the wrong side of it. Don't be stubbornly looking at this pound dollar and saying like, oh, I'm going to short it. It's like, if this breaks north and it goes north, I want to stay bullish, right? So, I mean, I'm not trying to fight wherever this dollar index is going to end up going. Okay? All right, so that's pound dollar. Again, indecision right now. I am personally looking for a short trade with my Wave Rider system to have this confirmation line up to the downside and then take a trade back down towards 3,200 or so. If I'm wrong, I did take a small loss yesterday on this one it was like a 90 or 100 pip stop loss, but small trade size. So if I get another trade in, it'll increase trade size. If I win on that for 2-to-1, then I'll make my money back and be net positive. That's fine. But what I'm watching really closely is I'm certainly watching this resistance and this resistance, because if we break above here, I think it's going to make its way back to 1.40, where this whole channel breakout started. So there is an opportunity on the pound dollar to break out to the north at 140, but price has to prove a break above 36.70. If we break down below 3,500, price has room to drop to 3,200. So there's the opportunity right there on the pound dollar. It's confirmation above, confirmation below, both of which have 300 plus pips of opportunity. All right. Again, worth waiting for, worth looking for confirmation. All right, that's pound US dollar. Pound yen. Pound yen, same thing. Lots of indecision. I'm currently short on the pound yen, and I like this resistance area. We have lots of resistance here on 158 And even after having this retest of the high, again, I have the wave rider looking for shorts, and I'm trying to get this thing to head back down. I told traders this week, if we hit this low, that's going to be target 1. If we hit this pocket, these lows here, this is my big profit window between 151 and 150. And I have my robot actually going to it'll turn itself off at 150 if we hit it. Okay, but I am looking for more confirmation in the downside. You now have about 5 to 6 days of indecision on the pound yen. Another one that we've been trading pretty closely this week, I did take some profit on, was the pound New Zealand. I was trading at 2.0262. We're back down near the lows. This is not a bad spot. I closed out yesterday around 202.90. And if you're looking at this right now, you're up another 30 pips. We have 2 positions in, so that adds up pretty nicely. If we come back down to the same low, that's not a bad spot. Again, it's conservative profit because I'm still looking for this chart alarm set at 2.0070. That's my target 1. I'm also looking at this pocket right here around 1.98. So target 1 is right here. Target 2 is right here. And I'm trying to hold this pound New Zealand, but I did take some profit yesterday. I told traders in the flex room that if we see price pulling back again to the backside of the trend line, I will short it again and take the same trade. So if all we have to do on the pound New Zealand dollar is, let's take some profit at equal lows, respect the structure. If it pulls back again, sell it again, look at the structure lows, take some profit, and just trade the range a little bit. If it goes lower and I'm out of the trade, I may try to participate with a bear flag or so. I might miss it, and I might wait for another trade later. Collectively, it was like 200 some pips yesterday that we protected, I believe. Let me look at the flex document here. We closed it out. Here's my trade log. Pound New Zealand dollar, where you at? So that's our pending sell at the highs at 2.05. Our pound New Zealand up here, yep, 245. So we closed out for 245 pips yesterday. And we'll get back in. That's all I'm looking at. Okay. All right. Luke says, will you stack the pound New Zealand once it breaks 2,000? So what my preference would be, Luke, is I would rather do this. I would rather have the opportunity to sell it at 205 and then stack it from 204 to 203.50 to 20300 and then stack that to the run at 2.0070. That's what I'd like to do. Because if I'm going to sell it low and stack it low, then I need to be very protective of those profits, which, again, is fine. But if there's a chance we can come back and get filled at the highs, I'd rather start my trade here and then stack to the downside within the same range that we've been trading for the last couple of weeks. So if that's a possibility, that's what I'll probably do. We'll talk about that next week in Flex. Okay? All right, a couple other trades that we're liking. So Aussie CAD is going our way nicely. Watch that 9,200 handle. Okay, New Zealand CAD is going our way nicely as well. And we're looking at a yearly pivot way up here at 88.50. I'm looking at these equal highs here around 87.60. I'll set a chart alarm there, 87.60 on the nose right there. Okay, so if that level gets hit, I'll be looking for some nice profit on the New Zealand CAD. I do have pending orders at equal lows and lower, but if it makes its way up, we have a bit of a falling wedge, which I like, because if this ends up coming back up to this area, there's room to get all the way back up to these highs. Okay, but I'm looking for a bullish pattern because this was such a swift drop to the downside. If we have a low to high swing and then a higher low to higher high swing, that's why I'm looking at this window for profit. So between 87.70 and 88.50, that's my profit window on the New Zealand CAD that I'm long on. So we had a couple of trades in, equal lows, and then waited for a trend line break, bought in again. So my break even is it's a profit right now. My New Zealand CAD is in. Let me check my MT4. New Zealand CAD right now is up 43 pips net on my positions. So I'm going to let it run. Okay. All right, New Zealand CAD's looking good. Fauna closed 478 pips between the pound New Zealand dollar yesterday. Excellent, good stuff. New Zealand Swiss is another one that I do like. So I'm not like super aggressive on this one, but as far as a profit target, I am sticking to my guns. 37. Oh, good. KHC is heading up higher. Nice. We have a 40 by 37.50 credit spread on KHC. So if that keeps pushing bullish today, if we get some of these, consumer staples, these, value stocks, if you will, this could be great. Coca-Cola making new highs, KHC moving its way up. But anyway, we'll see what that one does today. So New Zealand Swiss, currency pair that I think just has a great spot right here. We have an awesome pivot cluster around 6,350 to 6,400. So I have been, again, small trade, right side of the trend line, looking to add a little bit more, looking to stack up some orders with confirmation to the upside, but also kind of prepared, for this. 1, 2, 3, 4, 5. If we have one more lower low, I'm looking for a falling wedge. Then I'm starting to really line this up for this pivot cluster, and I think this is a really good looking trade. The reason I'm still being patient on this one and not getting too aggressive is because we're just off of this 2021 pivot, and we're now stuck in between. So we came close to hitting this, but it didn't exactly hit, so it might still find it. And then we have a gravitation back and kind of finding some equilibrium in this pocket area around 6,350. So that is going to be my profit window on New Zealand Swiss. I like how this one is looking so far. Traders know this in the flex room. I would love to see a big move on the Swiss franc, meaning weaker Swiss franc, because technically it's one of the best alignments I can find. Swiss yen looks great to the downside. Aussie Swiss, New Zealand Swiss, Euro Swiss, Pound Swiss, Dollar Swiss, all look good to the upside. But it's, again, with a lack of volatility and a lack of follow through, we're just literally watching price go back and forth. So, see here. Strider, 106 pips on the Kiwi CAD. We'll rebuy if it retraces. Excellent. Okay, very nice. Very nice. Good. Okay, so that's some of the Kiwi crosses. Dollar CAD is another one. As long as we stay above 2450, we're at 2700. I'm looking to see if this will continue to head north. So we have this support right there. We have this resistance right there. And we hold above 2450. We have this little low to high push, some consolidation. I'm looking for more upside. If we see oil continuing to correct, doesn't have to necessarily drop a lot, but just correcting back into the mid 80s, that should help thrust the dollar CAD higher. Dollar CAD, in my opinion, I think 130 is an obvious target to the upside. It's a round number. It's been a psychological round number for many years on this currency pair. And also with the channel resistance, we could run all the way back up into 3350, which was a 2021 yearly pivot. So there's still structural, profit potential on this one, and it just depends on how severe oil's correction becomes. I mean, oil does have room to drop to $70. Pretty easy. But I mean, I don't know how all of a sudden you go from energy and oil can't be stopped to all of a sudden it just has like a 30% correction. I mean, that's it can happen, but I think that energy is still going to stay fairly elevated. Speaking of energy and looking at sectors, I was looking at this morning. So Wall Street's open right now. This was the heat map from yesterday. Everything in red. Geopolitical tensions continue to dominate the markets, and we should have a correction. We should have a healthy market cycle, a healthy correction. It makes sense on the bigger time frames, just having a high to low on the SPY, and then a lower high to lower low. Why can't we just have a healthy market cycle? High to low, lower high to lower low, get it over with. Get the market to cleanse, have this 20% correction area, and then we'll see if the market's really going to defend this support. Okay. If we get it, let's get it over with. But the market is doing everything in its power to keep it from happening. The Fed doesn't want, a down market on its watch, and it's trying to transfer everything to it's not our fault. We're trying to raise rates. Look at what we've done. Doesn't matter. I mean, this move has been parabolic. It's not even a healthy market cycle without a correction. So let's just get it over with. It's crazy how reluctant the market is to do anything to the downside. But at the same time, it's showing that it can't do anything to the upside because we don't have any fuel. And we don't have any backstop to show hey, look, we're going to keep everything low and it's crazy cheap money and it's forever liquid. It's like credit spreads have gotten really wide. Credit leads equities. And, when things tighten up, things get tougher. But this, even just the swing from COVID's low in 2020 to now, we should have a market cycle that is allowing for a correction. Period. That's it. Now in this area, now we can have a conversation about trying to grind our way back up to these highs. We get through this very difficult, turbulent Q1, and we'll see what the market's made of as the Fed cycle starts to kick in. But anyway, that's all, stuff we just have to navigate. Okay, but good stuff on the trading this week, everybody. Making some pips, that's always exciting. Let me see if I had some robot pips this week. Let's see here. So what I do this week in some pips. I've got 216 pips this week closed out in profit. So far for the year, up about 1,800 pips. And it's steady, and hopefully there's a nice wave of pips coming in with some of these position trades that I've got riding. So I mean, some of the Swiss pairs, especially if I get my Euro Swiss to pay out, Dollar Swiss to pay out, those should be 2,000-3,000 pips here and there. So I'm looking forward to some really nice chunks of profit in the next maybe a couple of months. All right. But all right. Anything else? I mean, like I said, chart alarm. I mean, I look at these charts and I hope they're not too messy for you. If you see all these little orange lines on my charts, those are just alerts, and they're just sitting and waiting, and they ding when I'm at my computer all day long. They're on my phone when I'm not on my computer all day long. I haven't had a lot of chart alarms go off. Like, we just haven't had a lot of prices move. So anyway, there's some news going on in stocks. I saw that Nimmer, if he's here now, or you were with us on Monday or last Friday, I think we took this trade. Palantir was at. I did a 14 by 13.50 credit spread. I have not closed out my long put yet. So we're at 1161. I was kind of waiting to see how this one behaved for the remainder of the day. If it flushes down lower, then I'm probably going to look at right now it'd be about a $2, about $1.90 to $2 long put. If I can close it, if I can try to get kind of the true value, I will. But I'm going to end up owning some of this. It's my first go around with this stock. I've let it get beat up. This is, I mean, you talk about getting beat up. This is nearly like 100% down from an initial move at $10. We'll say $10 all the way up here to 40 some dollars, and we have retraced 74%. So again, I like some of these tech stocks at a pretty hefty discount. I accept it. I know that this week I might get assigned on Twitter, which is trading at 35.17. I have a 37 by 36 credit spread. Uber is another one that's sitting right at these levels. I haven't done anything with the long put yet, but we're going to talk about these in class at 10 o'clock for Equities on Demand. 38 by 37.50. I'm watching this one. Uber, I don't mind. I said just brand recognition wise, I mean, it's already pretty reasonably discounted. The COVID low here all the way down to $15, which is obviously an awesome gain all the way to 64. But we're pulling back, and from this area, from high to low, we've had about a 50% correction. Now, I will say this. You go back into the early 2000s after the dot-com bubble burst, you had the NASDAQ composite, the entire index was down like 80%. So, I mean, right now it's barely down, right? We're down. We had like the low on the NASDAQ around, I don't know, 17, 18%, something like that. There could still be like just tons of violence in tech over the next 6 to 8 months. I don't know. I just feel like we could have a very fragmented market where we could have tech just dead and toxic, like I've talked about, this year going into value plays. But we'll see how resilient the tech market is. I mean, tech is changing the world for sure. But I'm also knowing that if I'm going to own tech stocks, I'm really only taking stabs at ones that are already heavily discounted. I got back in on ARKK, which is ARK. I mean, Kathy Wood's just sucking wind right now. I mean, ARK is down a ton. Every major holding that they have is just getting crushed. I mean, ARK is down. I mean, I got a credit spread at 77, 76. I cashed in a long put. My break even is lower, but it's certainly not impressive. I can turn this into like a $20 share profit if it hits $100. But I'm going to have to sit and wait for a while. So, I mean, I'm not doing major allocations to tech. I think having some really decent stocks, or in this case, an ETF that represents decent stocks, it's going to take some time, but I think tech will get a recovery. It's just, I don't expect tech to make new highs anytime soon. I think that overall, Apple is your safe haven. If you want to look and see, how resilient is the stock market, look at Apple. If Apple is breaking the lows, everything's going with it because the index will probably be breaking lows as well. Okay. Bitcoin hit 40,000. Yep, I saw that Bitcoin is down. I was telling traders this week in my Flex trading room, I had a conversation with 8cap, who is a broker out of Australia, and we just had a conversation around cryptos and risk appetite. And right now it's pretty easy to see that Bitcoin is still a risk on type asset, right? I mean, the markets have been uncertain, and I saw this, what is it for next week? Like, it said something about Biden next week doing an executive order on regulating crypto. It's like, whatever that looks like from the U.S., fine. You know, but is it going to hurt overall? I don't know. Maybe. I mean, but technically we talked about this pocket getting filled around 40,000 bucks and it's right there. So honestly, if I looked at this exact low, I might end up taking a little stab here at Bitcoin. This high is around 39,000. And so we're sitting at 39.8 right now. I might throw another little chunk in here around 39,000 just to see if it's going to find this pocket and use it, right? If it uses this level, we did break this recent high. So if this is a crown structure, yep, there you go, 39.8 pocket area. So if we have a crown structure and it finds support, I'm looking for this to bounce. But at the same time, you know, this could be a small trade. If it goes down to fresh lows, then sure, I'll buy more at 30,000. You know, I'm interested. But it is definitely correlating more with risk on. So if Bitcoin's going up, we're seeing the market, you know, stable, trying to push higher. If the market's showing signs of uncertainty, you get a lot of red in the stock market, Bitcoin and, you know, those riskier assets are going lower. All right. Yep, but still dropping. Correct. So it's at 39.7. I don't think I need to catch a falling knife. If we have a bullish day to close today, then maybe it's justified where my resistance is looking to hold, right? This is past resistance, could become support. We're right at the pivot for the month of February. But if it flushes down aggressively today, and remember, I mean, we're still looking at the markets. It's now 12 minutes into the open. SPY is down. DIA is down. Qs are down. VIX is up. Okay, so this means that my SVXY is probably heading lower. My $56 call is not going to get called away, but I will cover it again next week. So this expires today, and I'll lower my cost a little bit. My cost on the SVXY is going to be something like 52 and change. So let me check this one really quickly on my spreadsheet. SVXY, I've got a 45 cent covered call. It's a $56 strike price. So that lowers my cost to $53.45, and I'll do it again next week. And even if we bounce, you know, what I'm looking to do is I own the stock. I own SVXY. If we bounce back up here and I can lose this thing at, you know, $55 or $56, that's what I'm going to try to do. So I'm trying to turn this thing for like a $2 to $3 profit. The same thing is true on the VIXM right here. If volatility is spiking up, right now I'm up about 26 cents a share, and I'm trying to let this thing go around $33.50 to $34. So trying to flip this for another $3, $4 play. Just some little hedges, just some little grabs of profit with volatility. You know, so that helps. I mean, that kind of pads the profits, and I can use that cash and start, you know, buying more shares with stocks that I really like. Okay, yep, so Ethereum's down. I mean, look, we can go to total market cap. So you go to coinmarketcap.com and just see that everything's down. You know, we were very close to 2 trillion earlier this week. We're down to 1.83. So Bitcoin is down the last 24 hours. Ethereum's down the last 24 hours. I mean, essentially everything is red, right? So it's tough. You got, I mean, those that are, you know, bullish, you got to stay committed. You got to ride through this stuff. Those that are like, I don't know. I mean, I'm not a critic. I'm not a skeptic. I think that cryptos have some meaning. They have some utility. They have some scarcity. I think there is a place for them. I just think that the world right now has to figure out how we're going to coexist. You know, we have a fiat system. We're looking at this and who's going to adopt it. I mean, it wouldn't be surprising if what's happening in Ukraine starts to see more, you know, Bitcoin adoption. What's happening in Venezuela, El Salvador, more Bitcoin adoption. You know, what's happening in Canada. This is what's crazy. Like, I mean, the crowdsourcing that's been going on for the truckers that have been doing sit-ins and protests, they've been being funded in Bitcoin. You know, so it's not an evil thing. It's just, I don't know. It's almost like an anti-system play right now with what's going on. So anyway, verdict on WTI. Let's take a look at that, and then I'll wrap it up just to get ready for class at 10. So WTI, this is oil. Yep. So we are, same thing. Look, I can look at U.S. oil. I can look at WTI. I can look at Brent crude oil futures. They're all coming off these recent highs. Now, from a technical standpoint, I totally get it. The chart's pretty easy to see. You connect these highs, okay, right there, and you connect these lows. In fact, I'll take this back a notch. So take this here. So connect the highs, and it's perfect technical resistance, okay? Connect the lows, and we have support. So this is all I'm looking at. And what I mentioned earlier today is, look, this could still stay within the structure and create volatility where we can come all the way back down to the lows around that yearly pivot, which gets us back around $68 to $70. But also inside of this is a midpoint, something like that. And so between this past resistance and this pivot, if we just correct, I could see us finding the midpoint and then bouncing back up. I really do think that oil has a better case for finding $100 first before it finds $70. That is my opinion. So I do think that all we are seeing right now is a little bit of an unraveling, a little bit of a correction, but I don't see this severely going lower. That's just me. I think that we'll probably hit $100 before we hit 70. But again, I'm not actively short on oil. I mean, right now I'm long against the CAD. I'm long dollar CAD, Aussie CAD. But I'm also long CAD Swiss. So there's a way I still have some exposure on CAD strength, but I also have exposure on CAD weakness. And honestly, that's what a lot of my Forex trading has been this year is I have hedging positions. I mean, if dollar gets stronger, I will benefit on dollar Swiss. If dollar gets weaker, I'll benefit on euro dollar. I have Aussie dollar that we shorted. I'm long on New Zealand dollar. So there's a lot of interesting trades where it's like, I don't care what happens, but what I need to happen is I need price to move. The Forex market cannot sit and oscillate in these tiny little trading ranges unless I'm actively trading them. And my perfect storm is a robot that does that, but I only have that running on a few currency pairs. But for my bigger positions that I'm building, I mean, my P&L is barely moving. So anyway, Peter, that's my thoughts on oil. Is I think we'll hit $100 before we drop significantly back down to 70. The only way that I can see us dropping really, really aggressively is if all of a sudden like everything is perfectly resolved in Russia and they back off and there's no, the probability of an invasion, the probability of a conflict would be nil. And then I see oil dropping, okay? Otherwise, I see inflation, commodity prices, energy prices, all still pushing bullish and staying resilient. Okay? So that's my thoughts. All right. Anything else? So equities on demand traders, I'll see you in 13 minutes. Thanks for being with me this week. We'll be back at it again next week on Monday, Friday, same time, same place, youtube.com/Chris Pulver. If you're watching me elsewhere, if you're watching me on Facebook, on Twitter, LinkedIn, awesome. Nice to have everybody here. If you would do me a favor, everyone watching on YouTube, if you'd click that thumbs up button for me, that helps the algorithm a ton and gets this video out there for everyone to see. I did post a video this week on the number one rule of trading. It's not that hard. Number one rule is don't lose money. How do you do that? It's not be perfect. It's not never lose. It's trade small and lose small. Build the process up. And I know that traders that are, struggling emotionally or feeling like they have these emotional swings in trading, you trade smaller and you make the wins and losses insignificant. It just becomes a game of trading, and you log yourself, a few hundred trades, you log yourself a few thousand trades over 6 to 12 months. Guess what? You're just trading, and so you digest all the stuff that's getting thrown at you. You watch your price action. You find good trades. And the process, take care of the profits. We keep talking about it. Okay? All right, everybody. And that's it. So next week, business as usual on Monday and Friday. The following week, I might have an adjusted schedule for March 4th. I will be out of town the 2nd, 3rd, and 4th. So I might post a recording instead of a live session on that day. But next week, we'll be here Monday and Friday, same time, same place at 9 o'clock. Okay, so looking forward to seeing you all then. Let's have a good day to wrap up the week. Have a fantastic weekend, and see you all soon. Thanks a lot. Bye.